What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is January 20th of 2021. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I want to spend some time to do a deep dive on a topic that I think is really important to a lot of you out there in the crypto space. And it has to do with analyzing the price action of a variety of different competing blockchain protocols or emerging cryptocurrencies. You know, we've been seeing just yesterday, for example, Ethereum breaking its all-time highs, more confidence around the idea of the altcoin cycle sparking. And a lot of people are curious about, the blockchain plays that they have, maybe competitors to Ethereum like Cardano or Neo, or interoperable plays like Polkadot or Cosmos. So I want to go ahead and spend some time here to actually break down how you can actually go about analyzing whether or not the cryptos you own are outpacing those competitors that you're trying to compete against. I understand there's a fundamental narrative to argue at the end of the day. People love to discuss the fundamentals. I'm a big fundamentals investor as well. But one thing that's very critical to understand is that when we're in this kind of market, when we're stepping into the early stages of the altcoin cycle, where you really have to make sure to be on top of your portfolio and where you're allocated with your capital, you need to see if your plays are outpacing not only the broader market, but more specifically towards our topic here, the competitors you're aiming to go against. And that's a very, very critical thing to understand. Again, you can, if you're just fundamentally investing for the next 10 years, this isn't something you per se have to stress about. But if it's something that you're considering in the sense of, a position you're owning for a couple of weeks, a couple of months, you don't really hold any specific allegiance to it, and you're trying to maximize profit in the market, then this is a very important video for you guys, okay? So let's go ahead, let's cut out all the noise and dive straight into it. Now, what we're going to be doing here today is utilizing something known as ratios. So you'll probably be able to see on the screen here that instead of looking at a typical ADA chart, we're looking at Cardano here, for example. But we're not just looking at Cardano in its normal sense. Most people on the surface are going to do one thing. They're going to look at ADA to USD. So they're looking at the price of Cardano in dollar terms. That's valuable. In that case, you can kind of see if it's going up, if your investment's going up or going down. That's really good. Another step that people take as well that gets you a bit more deeper perspective is comparing it to Bitcoin. So doing the trading pair of ADA to BTC. This is where the vast majority of liquidity for Cardano is actually trading, in fact. And it's a question here of whether or not we're outpacing Bitcoin, right? Well, these are what's known as ratios. Even the dollar pair in this case is a ratio. It's saying how much dollars could I get for an ADA token right now? Right? And then vice versa as well, or similarly in this case, with a ratio to Bitcoin, ADA to BTC would be how much Bitcoin in this case can I get, or Satoshis, or fractions of a Bitcoin, can I get for my ADA token. The most important thing, though, you want to ask yourself is, who is ADA up against in this case? Who would you rather be investing in if you weren't investing in ADA? And it's likely a similar player in the space who's doing the same type of functionality. Again, I'm not here to dismantle or support either side here for these blockchain protocols, guys. All I'm saying here is that it's very important to keep in mind these ratios. So what we're doing here is we're taking the ADA BTC pair in order to get as much price action that we can work with here. We're taking ADA BTC, so ADA's performance against Bitcoin, and dividing it by Ethereum's performance against Bitcoin. This builds basically a custom ratio where the BTC and the BTC, they cancel each other out. And now we're able to get a long-term set of price history of how ADA has performed against Ethereum. Now, this chart, as many of you probably noticed, looks a little bit different than what it might have looked like if you were looking at the Bitcoin chart or the USD chart. And that's because we're looking at the ratio chart of ADA against Ethereum. Now, this is very valuable here because a lot of people don't use this. I would tell you guys that probably well over 98% of traders don't even know you can do this in TradingView. And that's pretty shocking, but I'll show you guys just how powerful it can be. You can already probably notice here some general trends here as you look across the chart. And I'll go ahead and just give you a moment here to just consider here again. So what the ramifications of this are in this case is that if the ADA ETH pair is going down, this means that Ethereum is either outpacing Cardano, or roughly speaking that maybe Cardano is selling off faster than Ethereum. So generally speaking, when the ratio goes up, ADA is winning. When the ratio goes down, ADA is losing to Ethereum. It doesn't mean that it's not going up in dollar value. It doesn't mean that it's not outpacing Bitcoin, but it's not performing better than Ethereum, and vice versa. If the ratio is going up, ETH is underperforming against Cardano, right? Okay, so I rambled on enough here. Tell me if you guys see any trends here, right? From your maybe expertise in technical analysis and your time analyzing the markets here, I just want to hear from you guys here real quick on the chart what you think you can see here in the sense of the trends. And then we'll go ahead and we'll turn our drawings on here in just a minute. Just want to take a moment to pause. Alrighty, I'm going to go ahead, I'm going to turn on my drawings here, and this is what I roughly pick up. Now, you'll notice here, I'm not drawing 50 different lines. I'm not using any crazy set of technical indicators. What I'm looking at here is simple principles of naked trading. And I don't know if you guys, many of you watch the channel, you probably know that term by now. But no worries, I'm wearing clothes. The basic thing about naked trading is looking for support and resistance. These can be, descending lines of resistance, ascending lines of support. It can be generally these kind of flat lines of resistance and support. We're basically looking when it generally tends to be that, for example, in this case, that Cardano might be at a discount to Ethereum, or might be overextended against Ethereum, historically speaking. It doesn't mean that it can't break these levels up or down, but it's just generally going off of what we've seen throughout history that tends to be a good point to buy in or take profits, or maybe alter or swap into the alternative currency, right? So just a general kind of train of thought here again, the mentality of what we're talking about here is, let's say, for example, we're bullish on the idea of a blockchain protocol, whatever it may be, bringing about smart contract development, bring about decentralized applications, DeFi, enterprise blockchain. We generally all agree, whether you're a supporter of Cardano or Ethereum, in that narrative, right? That this is going to be valuable. So we generally want to make sure our money is cycling into the winning play out of blockchain protocols like Cardano or Ethereum that are servicing this need, right? It'd be like, for example, you can do the exact same thing, actually, interestingly enough, with, for example, Google and Apple stock, right? If you thought both companies are great, you can see how the ratios of how they perform. You can do this exact same thing by just simply dividing the stock by one another. You can do this by indexes. You can do all types of different ratios. But I digress here. I'm rambling on. So what's my general thesis here? When I look at Cardano, what would be my thesis here? Well, I know some of you guys think I'm not a big supporter of Cardano. I interviewed Charles back in 2017. As much as I would like to see more progress on the fundamental side of things, as now that they're continuing to improve the protocol and whatnot, putting all my fundamental arguments aside, it's on the cheaper end against Ethereum. It's on the lower end here, which is actually a good sign. We want to buy at a discount range. We want to buy in the lower tier range here, because when we get the bounce off of this support line like we did over here and over here and over here, we tend to at least at a minimum break above this line here. And we can see on the ratio here, the number's a bit abstract, but we can generally tell here by going from around 20,000 points here on the ratio all the way up here to nearly around 60,000. It's almost a 3x performance against the performance of Ethereum during these cycles. Now, is there a guarantee we're going to see that? No, we don't know for certain, but it does give us a bit of context to know what history has shown is tended to happen at around this range. So we're not getting it exactly at the discount rate if we were to buy now, but it has pulled back here. It's provided a nice dip against Ethereum. Perhaps this might be a time where we can focus on positioning ourselves in ADA. So this is just a broad example here. And we want to see how ADA continues to perform against Ethereum over the long term to see if we, for example, break above this line like we did in 2017 going into the altcoin cycle, right, the peak of the market. And also considers, well, they could break down lower. Ethereum could have some major catalyst news. It could really continue to maintain market share, and ADA could go down. It could be either way, right? And again, it's not about our subjective opinions. It's about simply analyzing what price is telling us. And on these ratios, it gets really easy to see what plays generally are exciting at the given time. So this is another one here. For example, Polkadot, right? Dot to Ethereum. What's nice here is that we actually have a trading pair on Kraken and a few other exchanges that allows us to trade Dot directly to Ethereum. So we don't have to do all that complex work of typing out the ratios. Now, let's go ahead here. Just take a look at the chart here. What are some of the things that stand out to you in the sense of the ratio here? I'll go ahead and I'll flip off the drawings here so you guys can see it. So this is the simple thing that stands out to me. We've got similar lows here where in this case people started to acquire or started to buy in to DOT versus Ethereum and started to push the price higher in this case versus Ethereum. Along with this as well, this is a general resistance range. We got knocked down here back on the 17th of January. This was generally where we had some consolidation and resistance back here in August of 2020. And along with this as well, we've got this midway point here in the first initial cycle that proved as support in the past. It started to act as resistance to some degree. Now we've made that support here. It's a question here of whether or not we're going to be able to make support there again. That's what I look for. Again, no complex indicators here, guys. We're keeping things simple. And again, it's not about fundamentally whether I like Polkadot or ETH better. It's just a matter of what price is telling me, what the ratio is telling me. Let's go ahead and take a look at another one here. Just as, again, it's more practice here and to cover some more cryptos you guys are interested in. The NEO blockchain. We've been covering NEO since back in 2017 when it was Ant shares. And of course, it went through the rebranding. But let's just go ahead, take a look at the ratio here. This is NEO BTC to ETH BTC. So pretty much NEO to ETH. And this is the general trend that I pick up here. In this case, NEO was in a generally descending channel or a descending wedge here in this case, where we had lower highs and lower lows. So generally when we came down this bottom range, this was generally the time we could buy in a NEO and have generally about a, anywhere from like a 50 to 100% return against Ethereum in these little miniature cycles. But now we've actually broken down below it. And the problem here is that Ethereum's been performing very strong and NEO has been able to keep up. So we've actually turned what was previous support over here, and then was previous resistance in the past, now into new resistance. You can see here, if we zoom in, that it's almost kind of like turning back over. What we saw originally that was probably upside price action has faded, it's gone down, and now we're starting to roll back over to the downside. And now the next level here would be to see whether or not we can make this previous level of support new support on the ratio. That means that NEO's got a little bit of a ways to go down against Ethereum. Again, doesn't mean NEO can't go up in dollar terms, but it means that it's likely not going to be outpacing Ethereum, right? So anyways, again, just something to consider. And again, it's not an argument about fundamentals, it's just the ratios. Let's go ahead and take a look at Atom or Cosmos. This is another one that a lot of people are curious about. So this one is a bit more difficult. This one doesn't really have much of a consistent trend, especially with the kind of range of price action we have going all the way back to May of 2019. Generally speaking, Atom and the broader trend here, if you just want to keep it stupid simple, right? Atom's been going down against Ethereum. It has not kept up with the price performance of Ethereum, generally speaking. Now, its USD value has been going up good, but it hasn't been going up as fast as Ethereum. So we've had generally lower highs and lower lows. What is interesting here, though, is that there's two things to consider. Well, first off here, we are on this, what seems to be on the lower end here. Now, again, we drew a line here for this secondary low. And the reason why we've done this, we usually wouldn't, because you could really subjectively draw that line at any point and then you break it and stuff like that. But the reason why we put that there is because we had a significant green candle here that actually is substituting as a possible bottom. So this is what we have best to work with here overall. It's one of the first major green candles in some time. And broadly speaking as well, we want to see if this is going to hold. I, again, would not enter into any position right here because there's just not enough technical ramifications that get me excited about the price action. It's too unpredictable. We had a volatile swing downward and upward back here. And since then, it's just been kind of, here and there, no serious trends. So I would stay away from Atom, or at least per se, probably opt in for Ethereum, because generally the downward trend is signaling that I shouldn't be interested in putting my capital into it. Now, this is another one here. It looks like I forgot to turn off the drawing here, but this is Kusama. So this is another blockchain protocol out there that a lot of people are looking at for smart contract development, etc. Generally speaking, for me, what's really interesting is that we've had support 2 times here at a previous point of resistance back here in July of 2020. And we've been having a descending line of resistance here. So now it's a question of whether or not, in this case, when we come down here, we'll be able to hold this support range and break above this line of descending resistance. I would generally be more opted in this case, to wait until we get towards that breakdown in the line. I want to wait until we really get, in that case, a breakthrough over the price range here. So again, having price come down here, just kind of drawing it here, roughly speaking, continuing to wedge in and then breaking up. Now, it tends to be for TA in this case, as you guys probably know, that a descending wedge in this case, descending triangle is a bearish pattern. So it would likely mean that it's probably more likely than not going to break down, but we don't know that for sure. And that's why, for example, with ascending triangles and descending triangles and a lot of technical patterns, I'm not too hyper focused on, I know this is going to be bearish now and stuff. We'll have to see if that plays out on the ratio. All right. And the last one here I want to look at is Hedera hash graph, H bar to Ethereum in this case. So generally speaking, what do we see here on the trend? Generally a similar case scenario, or what might appear at first a similar case scenario to what we saw with Atom against Ethereum. But what I see here is generally a potential opportunity here for a later day trade in this case, a trade later on, a couple days or weeks out, depending on how Hedera performs against Ethereum over the next coming weeks. So first off, we'd seen, generally speaking, since back here in March of 2020, almost a full year, Hedera has completely been outpaced by Ethereum. It's been taking a big hit against Ethereum. So we have this general downward trend here. We shouldn't be too eager to enter in just yet, but we do have a significant bottom here that we can by now confirm is definitely a temporary or a relative bottom here in the market. After a long-term sell, we've gotten a nice big pop up here today in price action, so definitely interesting. I know a lot of people are like, oh, now it's too expensive, I don't want to buy it. Your general time frame should be about where you think it really can go over the next coming weeks or months. So in this case, it could go up much higher if we see a few things. Now, what would be that kind of catalyst moment where I might want to make a trade? Even though it's higher than where it is right now, so I would be paying a premium for it, I think it's worth waiting and not taking the excessive risk by waiting for it to get above its midway point here on the cycle, right? The first going to bump up here. This is the next critical point of resistance. It's at an even level on the ratio of around 10,000 points, as you can see here on the right-hand side. And now we know, generally speaking, of a point where we could place an entry. And maybe we might want to take it to 18,000 or 22,000. This is where we've had a lot of resistance in the past. Or maybe you can take partial profits along the way. So how this generally looks is sometimes, for example, you don't want to just wait for one key even level because you might not hit it, right? A lot of people are like, oh, you just use limit orders and you'll be disciplined and you'll be able to take profits. Problem is if your limit orders don't get hit, then you're going to be wealthy on paper and then the market pulls back and you never actually realize any of those profits. Again, I would say to take what's known as partial shares or partial amounts of profit at different varying levels or ascending levels of the ratio in this case, or whatever trading pair again you're trading in this case, whether it's back to dollars or if it's back into Bitcoin or Ethereum, right? So this is just one example of ratios, guys. I know I kind of rambled on a bit today, but I wanted to show you guys some clear examples because one thing that you'll get from this channel that you won't get from a lot of other channels is you're not going to be panicking 24/7. I'm not about telling you guys to watch the minute or hourly charts. And along with that as well, I want to teach you guys how to do this yourselves. I think it's very, very important for you guys to be independent in that case and be able to trade and invest on your own. I do love you guys coming here in this case and watching the videos as we'll continue to put out a lot of great educational content. But I'm a big believer in your guys' capability to do this yourself rather than me just telling you, guys, you got to buy this one coin. It's going to go up 100%, in the next day. The thing is, in crypto, there are crazy things like that happen. But you can be so much more positioned or well positioned here by just simply taking a look at these ratios. So that's generally it for today's video, guys. I hope you all liked it. If you liked the video, please just consider dropping a like, leaving a comment, and subscribing as well as hitting the bell icon. And I know one thing that a lot of you might have wanted to see in this video was maybe more of a fundamental analysis of some of these projects. So if there's a project that you guys want to see me cover, let me know down below in the comments. And if you already see the project listed, just drop it a like. In that case, if someone's already commented it, just helps me to kind of prioritize in this case, which projects you guys want to see me cover in this case. And I'll try to do my best. I can't guarantee that I'll cover every project. But above all, guys, I hope you're having a fantastic day wherever you are. Thank you all so much for watching. Stay safe, smart trading, and I'll see you all in the next video. Take care, everyone.